Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. We're going to be going over the latest stock news updates, price predictions, and a comparison between Palantir and their peers and or their competition, depending on whether or not you think Palantir has competition. In this video, we are going to be doing an extremely deep dive into their fundamentals of the overall company, their business, and we are going to determine whether or not we should buy, sell, or hold the PLTR stock for the next year. For more videos on Palantir Technologies, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's jump right into today's stories. Now first, I want to start off by saying that this is one of the best Palantir articles I have ever read, and that is a huge compliment coming from a financial reporter. The article that we are going to be performing some analysis on today is called, and I quote, Palantir, How Valuation Looks Compared to Peers and If My Opinion Has Changed, end quote. And if you want more information about this article, or if you want to read the entire thing for yourself, which I really appreciate, which I would encourage you to do by going into the description, finding the sources, and reading this article for yourself, because the message in this article was articulated perfectly, and I 100% am in agreement with the article's author. If you didn't know, Palantir Technologies is a big data and analytics company that serves both commercial clients as well as government enterprises. Currently, the PLTR share price trades for $7.77. However, stock professionals believe the company is worth anywhere between $6 and $20 over the next 12 months. So what should we do as investors with this prior knowledge? Well, first I would say that analysts' predictions should be taken with a giant grain of salt, and they should only be used as a guideline of what the company could be worth and not what they should be worth, because again, people are using various metrics. Now, the author of this article starts out by talking about how he is going to use a data-driven approach on how to value Palantir Technologies by looking at their income statement, their balance sheet, as well as their cash flow statement. And by using the financial metrics from these financial statements, we can compare Palantir to their peers and their competition, which is why in this article, that's exactly what we will be doing. And of course, this is going to be a very technical video, but don't worry, I will give you a quick summary if you don't know what these particular things mean. So on screen right now, we have Palantir Technologies at the top, which has a $15.02 billion market cap, and we are going to compare them to other companies such as Snowflake, MongoDB, Splunk, Tyler Technologies, and HubSpot. On screen, you can see their various market capitalizations, along with their current stock price and what analysts believe the companies are going to be worth over the next 12 months. And just from an analyst perspective, it seems that Splunk and Tyler Technologies are what analysts are favoring when we compare Palantir, Snowflake, MongoDB, Splunk, Tyler Technologies, and HubSpot all to one another. I also want to say that we can compare these companies because they are all in the software space, and some of these companies have some overlap on what they do. And although sometimes they're not going to have direct competition with one another, they are definitely peers in the software space. I also want to point out that all of them except Snowflake have an extremely close market capitalization and overall company valuation, which ranges anywhere between $14 billion to just above $15 billion. However, on the other hand, Snowflake has a market cap of around $54.34 billion. Other than that, they are all basically around the same size. So from a market cap or from a valuation metric, we can see that Palantir and Splunk have the lowest market cap, which could communicate that they have the greatest opportunity to grow. But the first metric that we're going to be diving into is going to be their price to sales metric, followed by their PE ratio or price to earnings ratio, their price to free cash flow ratio, their equity to market cap ratio, as well as the return on equity. We're going to start off talking about their PS ratio, or their price to sales ratio, which compares the current stock price or the overall market cap to the amount of money in revenues and sales that they are bringing in per year. Ideally, we would want this ratio to be as low as possible, and Palantir as a company has a PS ratio of 8.47 times, which is really not that bad. I personally look for a growth company that has below a 10 PS ratio. Now, when we compare Palantir to the average of the peer group that we are comparing them to, we get an average of a 13.01 times PS ratio. So that's very positive and good that Palantir has a lower PS ratio than their overall peer group. However, I think that Snowflake, due to their extraordinarily high PS ratio of a 32.28 times multiple, we want to actually exclude them from this metric so we get a more accurate representation of the peer group average, because with Snowflake's very high PS ratio, it's actually moving the average for the overall peer group. However, even if we take Snowflake out of the equation, we still have an average peer group of a 9.16 times PS ratio, making Palantir Technologies one of the lowest premiums in this group, which means that again, Palantir Technologies as well as Splunk are the best buying opportunities if we are just looking at the PS ratio metric, which means that out of all of these companies, Palantir and Splunk are trading at the lowest multiple, and which means they are trading at a lower premium than these other companies, which again is very good news. Now, when we talk about their price to earnings ratio, that is a slightly different story, because technically you can't have a negative earnings or a negative PE ratio, and the only company in the entire peer group that has positive earnings is Tyler Technologies, which has a PE ratio of 83.78. So by default, they would win the PE ratio. But instead of using a PE ratio, let's use a better metric, which gives us a really good opportunity to look at their non-cash expenses on their income statement in terms of their overall profitability, and we can do that by looking at their free cash flow. So instead of the PE ratio, we're going to be using the price to free cash flow ratio. And for the FCF, which is their free cash flow, we are not using this on an adjusted basis. We are using the actual FCF, which in Palantir's case would mean that they are trading at a 57.72 times FCF or free cash flow. And ideally, again, we would want this metric to be substantially lower. Now, the good news again is that the average for the overall peer group compared to their competition or others in the software space, collectively out of these 5 companies, have an FCF multiple of 78 times, which clearly Palantir trades underneath, which again is fantastic news. If we're looking at their price to free cash flow ratio, we see that Tyler Technologies as well as Palantir Technologies are the clear winners here. And again, that is absolutely fantastic. If you want to look on screen, you can see how all of these companies compare to one another, or you can see this graphical representation, which again means that Palantir as well as Tyler Technologies are the best when we look at this price to free cash flow metric. My only caveat to this article is, and I understand why he did this, is you're only comparing Palantir to 5 other companies. Ideally, we would want to compare them to an entire space industry or sector, which makes our population or our sample size, depending on which one you gravitate toward, a better metric to base this off of. However, I do think that comparing Palantir to Snowflake and Splunk and MongoDB and Tyler Technologies as well as HubSpot are pretty good comparisons. These are some of the companies that I personally would compare Palantir to, so I think the author does an excellent job using a smaller sample size. On top of this, we also want to see how the company's equity compares to its overall market cap multiple. So we're going to dictate what the market deems the premium of this company to be, and in a perfect world, we would want the premium to be as low as possible. However, in this ratio, we're going to have to exclude Splunk, similarly to why we excluded MongoDB from our last ratio, because they just don't have anything to offer because they actually have negative equity on their books, which means we can't include them in this valuation metric. However, even if we exclude Splunk, we still get an industry average of 12.79 times, and again, Palantir comes in clutch, coming in at a multiple of only 6.39 times, which again would mean that Palantir and Tyler Technologies are the winner in terms of their equity to market cap multiple. The last valuation metric we are going to use is the ROE, or return on equity, but only one company has positive ROE, which is Tyler Technologies, so we can't fairly use this metric. Instead, we're going to move straight into the income statement, where we want to look at the income statement's compatibility between these companies and to see how they compare in terms of their growth in revenues, their gross profit, as well as their net income. For revenues or a revenue growth perspective, Palantir has grown their revenues in this particular period from 2019 by around 134.9% over the period. And this would make them the third largest growth rate out of these companies, to where the only two companies that beat them would be Snowflake, which has a growth rate of 518.74%, and MongoDB, which grew by 156.7%. So, if we are looking just at the growth rate, I would say Palantir and Snowflake have the best advantage here because they are rapidly scaling their overall revenues. Now, when we look over at gross profit, we see a similar story where Palantir comes in as the second largest growth rate in terms of their gross profit, where they improved by around 174.57%. However, Snowflake grew their net profit by around 616.4%. And if we take into consider the overall average, it looks like Splunk is the clear leader here. So in this particular metric, I'm going to say it's a three-way tie between Palantir, Snowflake, and Splunk, but overall, I think Splunk would actually win this overall metric. And as we look deeper into the income statement for their gross profit margin, again, I would think that Palantir, Splunk, and HubSpot could be the potential winners when we compare their total revenues, their gross profit, as well as their gross profit margin all together. Palantir, Splunk, and HubSpot particularly have the largest gross profit margin on top of very impressive total revenues and gross profit. So when we look at this company from an income statement, we would say that Palantir, Splunk, and HubSpot, when we compare revenues, gross profit, and gross profit margin, are very good companies. However, we shouldn't leave out Tyler Technologies either, because they were the only ones to actually generate net income in their TTM. And of course, by default, this would make Tyler Technologies the leader in their net income, TTM net income, and their overall growth, which is definitely something to keep in mind. Now, moving from the income statement over to the cash flow statement, we're going to be looking and identifying two main things. First, we're going to look at their cash from operations that each of these companies are producing on top of what their level of free cash flows are. Now, in this particular metric, again, I would say that Tyler Technologies takes the cake because their cash flow from operations are extremely positive. However, if we're looking at it from a growth perspective, we see positive growth from Splunk, Snowflake, as well as Palantir Technologies. If we look deeper into their overall cash flow statement, we can see that their free cash flows, particularly from Palantir, are very impressive, to where they went from a loss or negative $178.3 million in free cash flow to positive $260.2 million. Also, I want to say that Splunk has produced the largest level of growth in this particular metric, which means that it depends on what metric we use to determine who wins this category. I would say again that if we are looking at growth, then Palantir, Snowflake, and Splunk are all very close, where Splunk, then Snowflake, then Palantir would be in that particular order, with Splunk number 1, Snowflake number 2, and Palantir number 3. However, if we're looking at the entire metric of 2019 free cash flows, their TTM for their free cash flows, on top of growth, Tyler Technologies would take the cake here, but it really depends on what type of investor you are and what metric you are trying to look at. And if you are a growth investor, then Splunk, Snowflake, and Palantir may be your best buying opportunity. Now, lastly, we're going to look at their balance sheet. And the reason we are looking at their balance sheet is we want to make sure that they have good cash or cash equivalents on their balance sheet, and we want their ability to pay off debt to be very high. And the reason I like Palantir Technologies is that Palantir could literally pay off every debt and liability that they have on their balance sheet and still have around $1.5 billion worth of cash and or cash equivalents on their overall books. This goes very similarly for Snowflake, where Palantir and Snowflake clearly have the advantage and the strongest balance sheet, in my opinion, when we look at their overall total cash or cash equivalent reserves compared to their overall liabilities. Splunk has very high liabilities, MongoDB also has more liabilities than Snowflake does, Tyler Technologies has way more liabilities than they do of cash on hand, and HubSpot has a good average volume of both. However, if we are just looking at their total cash and their total liabilities, then Snowflake and Palantir Technologies are the clear winners in regards of their overall balance sheet for that particular financial category. It gets even better when we look at Palantir and Snowflake's overall long-term debt. And guess what? They virtually have no long-term debt at all, which means that Palantir's and Snowflake's free cash flow can instantly be used to either pay off debt, acquire other companies, pay a dividend, or basically do whatever the company wants them to do with this free cash flow. This is not the same when we look at the other four companies that I didn't mention. Splunk has very large amounts of long-term debt. MongoDB has large amounts of debt with very bad total free cash flow metrics. Palantir Technologies still has a substantial amount of long-term debt compared to their free cash flows, and HubSpot again seeks more of that middle ground by having a decent amount of long-term debt but okay cash flows to keep up with it. But again, if we are looking at total free cash flow compared to their long-term debt, then Palantir and Snowflake are the clear winners in regards to this metric. So what can we conclude by comparing Palantir to all of these other companies and their peers? Well, it means that Palantir is a good company to hold right now. All of these companies, depending on what metric that you look at, all have something different to offer you. It really just comes down to the type of investor you are, which should determine what company you invest into. If you are looking for very strong balance sheet, then that's Palantir and Snowflake. If you're looking at growth on top of very impressive metrics, you're looking at Splunk, Snowflake, then Palantir. However, if you're looking for pretty stable companies that also have a lot to offer investors, you're going to want to look at HubSpot and of course Palantir Technologies, to where Palantir Technologies and Splunk I think are some of the best companies to buy at their current price point. Even analysts agree that Palantir Technologies and Splunk are probably the best buying opportunity right now compared to their overall financial metrics holistically. But again, if you want to hone in on growth, then Splunk, Snowflake, especially Palantir are going to be your go-tos. All of that just to say that Palantir is still a great company, that they are extremely competitive in their space, that they are growing very rapidly, and they truly hold their own compared to other software companies, which is why right now I say that Palantir's PLTR stock is a holding opportunity. You may not want to buy more and overexpose yourself, but also you don't want to sell, because this could be a phenomenal long-term buying opportunity for investors who have proper risk management. And that's why the author of this article even reiterates that he's going to wait an entire year before he tries to change his investment thesis on Palantir Technologies, because Palantir again looks to have a phenomenal growth trajectory and long-term stock price appreciation ahead of it. But with that being said, I would love to hear your thoughts down below. Remember to go and smash that like button for more videos like this one. Don't forget to go and read this article for more fantastic information that the author lays out in this particular thesis, because I couldn't go into all of it without making this video unnecessarily long. But with all that being said, I wish you the best of luck. Remember to practice proper risk management, and I will see you in the next YT video.